Hey everyone, welcome back to Corporate Decoder, the place where we decode the cryptic language of corporate filings. And let me tell you, RocketFuel Blockchain Incorporated has some interesting moves to unpack this time. Get ready, things are about to get spicy, and not just with crypto. So, what exactly is going on here? RocketFuel Blockchain Incorporated has filed an amendment, and it is primarily about some changes in their leadership and how they're handling stock options. It is not a massive financial report detailing huge profits or losses, but rather a look at the gears turning behind the scenes. Let's dive straight into the big news. Bennett J. Yankowitz has stepped down from the board of directors. This doesn't just mean he is leaving his director role, he has also resigned from all his officer positions, including Chief Financial Officer. That is a pretty significant departure for any company, and it makes you wonder what prompted such a move. Now, here is a twist. While he is out as a director and officer, Mr. Yankowitz isn't completely cutting ties. Starting back in June, the company and he agreed that he would serve on the company's advisory board, so he is no longer in the driver's seat making day-to-day decisions, but he is still offering guidance. Think of it as moving from the captain's chair to a senior advisor role on the ship. As part of this new arrangement moving to the advisory board, Mr. Yankowitz was granted options to buy 100,000 shares of the company's stock. These aren't just any options, they're incentive stock options, meaning they have certain tax advantages. They come with a 10-year lifespan and a specific exercise price tied to the stock's market value on a particular day in June. A good chunk of these options vest immediately, and the rest will become available little by little over time. If the company gets bought out, all his remaining unvested options will become available right away. It looks like they're trying to keep him engaged and motivated even though he is no longer a top executive. And it is not just Mr. Yankowitz. The company's current Chief Financial Officer, Peter M. Jensen, also received a substantial grant of options. He has been given the right to purchase over 3.3 million shares of common stock, similar to Mr. Yankowitz's options. These are incentive stock options with a 10-year term. A portion vests immediately and the rest will vest gradually. These also have that change of control clause where all unvested options become available if the company is acquired. This is pretty standard practice to incentivize key executives. Especially in a company that might be looking at growth or potential acquisition scenarios, granting lots of options can align the executive's interests with those of the shareholders. The board wasn't just handing out options, they also made a move to increase the pool of shares available for future grants. They bumped up the number of shares that can be granted under their stock incentive plan from 8 million to 11 million. This is a pretty significant increase and suggests they anticipate needing to issue more stock-based compensation going forward. They are also seeking shareholder approval for this change, which is normal procedure. Details about Mr. Yankowitz's resignation letter are included as an exhibit. While we don't see the letter itself in this main document, its existence here signifies a formal record of his departure. Similarly, the agreement outlining Mr. Yankowitz's role on the advisory board is also attached. This exhibit would spell out the terms of his advisory duties, the compensation, and any other specific conditions of his new role. It is good to see these agreements are formalized, and there is also an amendment to their 2018 stock option plan. This amendment is likely what allows for the increased number of shares available for grant we just talked about. These documents are important for understanding the rules and structure around how the company uses stock to compensate its people. Now, let's look at what this all means. RocketFuel Blockchain Incorporated is clearly navigating a period of transition. The departure of a CFO and director like Bennett J. Yankowitz, even with his move to an advisory role, signals a shift in leadership. The company is also actively using stock options, not just for existing executives like Peter M. Jensen, but also for the newly appointed advisor. This is a common strategy in growth-oriented companies, especially those in tech or blockchain, where attracting and retaining talent often involves stock-based compensation. The increase in the number of shares available for grants is a key indicator. It suggests that the company expects to continue growing and will need to incentivize more people or reward existing ones. It also means that if you are a shareholder, there is a potential for your ownership percentage to be diluted over time, as more options are exercised and new shares are issued. The company's strategy here seems to be focused on incentives and retaining talent through equity. They're betting on future growth, so much so that they're expanding their stock option pool. The move of Mr. Yankowitz to an advisory role suggests they value his experience and insight, even if they don't need him in the executive suite anymore. One thing to consider is the timing. The board action to increase the share pool was approved in June, and Mr. Yankowitz's resignation as an officer and director was effective in late November. This spread suggests the changes were planned and executed over a period of time rather than an abrupt crisis. In terms of risks, any time there is a leadership change, there is an inherent risk of disruption. However, with Mr. Yankowitz moving to an advisory role and Mr. Jensen remaining as CFO, The core financial operations likely remain stable. The main opportunity here is the company's continued commitment to growth through incentivized talent. My take is that RocketFuel Blockchain Incorporated is positioning itself for further development. They are using a proven method of equity compensation to keep their team aligned with the company's success. The key for investors will be to watch how effectively these new grants lead to growth and innovation, without excessive dilution. It is a delicate balance, and the company appears to be actively managing it. Alright, that is our breakdown of RocketFuel Blockchain Incorporated's latest filing. What is your take on these leadership changes and the increased stock option grants? Do you think it signals a positive future for the company? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.